thank you very much indeed. Thank you for inviting me along. I was very keen to come because Better Finance, I think, is the voice for all those who use financial services, whether that's investors, savers and borrowers. And I know that you bring an important independent perspective to the debate. And I think it's a sign of the influence that you have, that you've been able to attract such an impressive list of speakers and panelists along today. And so I'm glad to be here, not least because your focus has been on the Capital Markets Union, which is a key priority not just for me, but for the whole Commission. And officials from my DG have been here all day and will certainly study the points that have been raised. And there is still a little time to go in the Green Paper consultation, so if any of you have been sitting and listening and feel moved to make a contribution, there is still time to let us have your views. Now, I could see from the programme that in the course of the day you've covered a lot of ground, but I'm sure that you have kept coming back to that crucial question, which is how to attract savings into capital markets. Almost all of the money invested in markets comes from retail savers and investors in one form or another, whether that's through direct investment in capital markets, investing through collective investments like UCITS, saving through a pension scheme, or simply taking out an insurance policy. So, of course, the retail investor is ultimately at the bottom of it all. So, like you, I know that Capital Markets Union won't work unless it works for those individual savers and investors. Building a stronger single market in capital is not an end in itself, but it's a means to an end. And the goal, at its most simple, is to increase the flow of capital into the economy by linking savings more effectively to growth. It flows naturally from the Commission's top priority, which is jobs and growth. And if the investment plan is intended to provide a shorter-term boost to investment, a stronger single market in capital would boost investment and thus growth for the long term. Businesses will be able to benefit by being able to raise finance more easily. People saving for their retirement will be able to benefit by having a wider range of more affordable investment opportunities. Institutional investors, the pension funds, insurance companies, will be able to benefit from having more opportunities to invest in long-term projects. And diversifying sources of funding would also spread risk and thus be good for financial stability. So a few figures, if I may, to show how Europe's capital markets are currently falling short of their potential. Savings held in EU mutual funds are around half of the American level. In pension funds, it's just over a third. EU equity markets are 60% of the size of their American counterparts. For corporate bond markets, it's just 35%. For securitization, 20%. And conversely, bank loans account for about 10% of non-financial company borrowing in the US, against about 30% in the EU. Our European bias towards debt rather than equity funding helps explain why our banking system's assets are more than 3 times the size of the EU's GDP, but the American system's assets are only around 70% of their GDP. Europe is rich in savings, saving some 2.7 trillion euros a year, relatively more than in the United States, but families' savings mostly stay in the banking system in their own member state. So we need to unlock some of these household savings in bank deposits and direct them towards capital markets. That wouldn't just be better for growth, for those businesses, many of them the SMEs Jacques de Rosière was talking about, which are the engine for job creation. Better returns for savers would be welcome for significant sectors of the European economy and would matter most to those who rely on savings the most, the elderly. And given our continent's demographic challenge, we all know how important that is. Now, I'm not arguing that we should simply take the United States as our model and try to mimic their arrangements. But I do argue that we should find our own way of making the most of the potential of a true single market in capital. Now, why are things the way that they are in Europe? First, there's the importance of Europe's local banking system in providing finance for small companies and mortgages for people to buy their own homes. This won't change overnight, and neither should it. We have strong local traditions that matter, such as the many building societies or mutuals across Europe that collect savings from their members and provide them with the mortgages they need to buy their homes. I value those traditions and the diversity of different kinds of bank, and that's why the Capital Markets Union must complement the role of banks and not seek to displace them. But if you have a system that is very reliant on one model, your whole economy is vulnerable to a contraction in that sector, as we've seen all too painfully in recent years, and in some countries more painfully than others. And second, and here today's discussion will, I'm sure, be particularly valuable, we need to understand the reasons why retail investors do not engage more with capital markets. The experts tell us that there's a range of factors at work, such as culture, confidence and trust, financial literacy, demographics and home bias. We can't change all these factors all at once, but we've taken steps through the reforms we already have in place to restore confidence in financial markets and to ensure that investors are adequately informed and protected. We need to continue to ensure that those who break those rules are brought to book. And we need to make sure that there is opportunity for new product innovation, for new challenges to enter the marketplace and take on incumbents, for consumers to be able to benefit from new technology. And that's where the balance of regulation is so important. We need to give consumers confidence to invest, but we also have to be careful not to stifle innovation. Although big companies complain about regulation, they find it easier to cope with than startups and small companies. We do not want regulation to be used as a barrier to new players entering the market and offering consumers more choice. So when consumers engage with the capital markets, we want them to get the best deal and the products that are right for them. And key to that is better price comparison and more transparency on the choices available. But also important, I think, is competition. Competition within markets, but also cross-border. And as things stand, those borders are very sharp. 94% of Europeans say that they've never bought a financial product outside their own country. And 80% of them say that they've never even thought of doing so. So that's one of the reasons why I'll publish a green paper on retail financial services later this year, where I want to look at the barriers that are preventing the development of a single market. I want to turn the telescope round and look at financial services from the point of view of the consumer, so that they can get more of the benefits that would come from a more widely integrated market where companies would be able to compete on product innovation, on price, and on service. Retail investors will only invest in capital markets if they trust those markets as well as the financial intermediaries operating in them, and believe that they can get a better return on their savings, which is also safe. So effective consumer and investor protection will need to be at the heart of the Capital Markets Union. We are, of course, not starting with a blank sheet of paper. ESMA and EIOPA have been given increased powers on investor protection through MiFID II and through other regulations. The single rulebook for financial services has established clear obligations for investment firms to take care of their clients' interests. There are specific rules on inducements and package products, and other provisions are aimed at providing clear and comparable information on investment performance. We also want retail investors to be able to understand risk better and to make informed choices. Financial literacy enables consumers to choose financial products more effectively and easily and to compare products. So I'm looking forward to studying your thoughts as to how that might be strengthened. The Green Paper seeks views on how retail investors could benefit more from investment funds, such as the UCITS funds, which are already popular vehicles for retail investors in capital markets. And we want to offer investors a wider choice among investment fund products and to lower prices by increasing competition among the funds. So consumer engagement with markets needs to go hand in hand with a broader approach to restoring their confidence in markets and giving them the information they need to make the best decisions. The European supervisory authorities, ESMA in particular, could have an important role to play in further enhancing consumer and investor protection by fostering best practice in member states' supervisory practices. Better Finance is rightly a great champion of transparency, and I'll be interested in hearing later what you have been discussing on the ESA's role in transparency in financial services. So my starting point for my whole approach to Capital Markets Union is to try to make existing markets work better and to take a number of pragmatic individual steps to get funding to where it is needed most, to long-term investment projects, to infrastructure and to our SMEs. And I'll just say a few words, if I may, about what I hope to see emerge in the coming years in a number of key areas. With the support of the central banks, we want to get the market for high-quality securitization going again in Europe. And that's not about going back to the bad old days of subprime mortgages. There must be no revival of those highly complex securitization instruments that concealed serious risk and were themselves an important immediate cause of the financial crisis. But high-quality securitization could make a positive difference to long-term investment by broadening the investor base to include more long-term investors, such as insurers and asset managers. I know that securitization markets are commonly seen as opaque, and this is naturally a problem for retail investors. But to get to high-quality securitization with the support of the ECB, the Bank of England, Basel, IOSCO are looking at it, we want to see how we could set up a framework for an EU market that singles out a category of highly transparent, simple and standardized products with an appropriate regulatory treatment. We're also keen to support institutional investors to invest in long-term projects. Insurance companies were given a number of incentives to invest for the long term in some of the more detailed rules introduced for Solvency II last year. I'm aware that there's a problem that Solvency II rules can seem to discourage investment in some asset classes. So I've asked EIOPA for advice by the end of June on the treatment of infrastructure investments. Private placements can support long-term investment and help broaden the availability of finance for infrastructure and for other projects. I very much welcome the work done by the industry to develop a pan-European market for private placement, and I look forward to seeing the first successful issuances under their new regime. I think that CMU can help SMEs get access to finance, and that's not a new goal, and the EU and member states have been active in a number of areas. Some member states have taken initiatives to try to channel funding more effectively to SMEs, and we're looking at the experience that has been gained under such schemes. We'll also be looking at SME lending in our forthcoming assessment of the impact of capital requirements. Other SMEs, I recognise, may want to have other options, like listing on a growth market or attracting venture capital. And companies that decide to take the plunge and offer securities on a market shouldn't be deterred from doing so simply because of the paperwork involved. And that's why we are planning to revise the Prospectus Directive so that it becomes easier for SMEs to fulfil their listing obligations, but in such a way that investors are still well informed about what they're buying. And I think this will be particularly important for the retail investor because I'm not persuaded that the current system is working as well as it could. Now, although there is some good basic information out there on companies and what they do, potential investors can't easily assess the credit risk that companies might present. So we're also looking at whether there is a way of increasing standardized data on credit assessment, again, without coming up with a system that would tie those SMEs up in a new tangle of red tape. Crowdfunding, which I'm sure you've discussed earlier, I think is a development with great potential and which is growing extremely fast. The models at the moment are mainly national, and I think we should look to see whether it's possible to encourage its cross-border potential, especially for SMEs. We're considering how we could improve the ecosystem in Europe for venture capital. If our venture capital markets were as deep as those in the United States, nearly 90 billion more euros in funds would have been available to companies between 2008 and 2013. New services and new jobs could have been created if the funding had been there. Businesses could have been developed and grown here in Europe rather than being developed and grown in the United States. Action in this area might include adapting the rules for European venture capital funds and European social entrepreneurship funds to expand the categories of fund managers able to offer those funds. So overall, I believe that the Capital Markets Union delivers the chance of a big opportunity. An opportunity for banks as important intermediaries of market-based funding, an opportunity for Europe to widen access to new channels of funding for SMEs and infrastructure projects, but also a big opportunity to broaden retail investors' choices of investment. I've been very encouraged by the support that I've had from all member states at the informal ECOFIN in Riga last week, and also from members and political groups across the European Parliament. They, like me, believe that there is an opportunity we can seize and that we have the chance now to make new progress on some familiar issues. Economic growth means prosperity and security for individuals, and that is, I believe, what everyone here is seeking to create. And I think that if we can ensure that Europe's markets are governed by transparency, by choice and competition, then I'm confident they can serve us all, as savers, as investors, as wealth creators, and as consumers. And then we can have, which I think is the title of the pamphlet that the Better Finance has just published, a capital markets union for growth, for jobs, and for citizens. Thank you very much.